Alright, I'm going to start Friday's highlight video with the one that I think offers the best trading lesson. I'm going to share with you my idea on AIG today. And I'll talk about the other entries I called as well. But AIG, daily candles here, you can see it was down here, it was pushing down, and it looked like it was, some people might view that as a breakdown below support. I view that as, hey, it's come a long way to get down to an area of support, and I'll show you on 5-minute candles what it looked like. Let me take after hours off here, clean it up. Okay, so one of our members, I think it was Shady, chat room name, pointed out AIG when it looked, I think, about like this. Increasing volume, it was down here around 33.50. I looked at the daily and said, hey, actually I went to 60s and said, hey, this has nice support in the 33.50 area. You see the bounce off it here, here, here. So whenever you get a sell-off that's come a long way and the volume is increasing and you've got support, time to start thinking long. Okay, now I want to share with you my entry idea in the chat room today. So what happens is you had nice shape. I always you hear me refer to the term shape. It just means you're grinding down. I'm loosely drawing or in my mind picturing a connecting line on the tops of the 5-minute candles here. I mean, it's pretty good shape as far as almost straight down there. Okay, volume's increasing, sell-off is increasing, almost like the volume and the sell-off are reaching out to each other. And again, remember, we're at support on the daily. Okay, so for that reason, this becomes interesting to me. But look what happens. Okay, that 5-minute candle, you don't have a break of a previous 5-minute candle's high yet. So now you've kind of lost this shape. Okay, this straight down shape. Now you've kind of gone a little bit sideways. And what happens is, instead of having that shape where I'm looking for a V bottom, okay, like a capitulation and then a reversal, now it started to go sideways, which means I fully expect them. Let me get the drawing tool going. At this point, you've got a battle going on. There's 20 minutes worth of a battle. You can see, what is that, 1.5 million shares, another million. So, I mean, a good 3 million shares traded places here in about 20 minutes time, and it's not really moving much. The obvious stops are anyone who's tried to go long anywhere for the last 20 minutes. The obvious stop's going to be right here, right below the low of the day. What I told our members is I'm waiting for them to run these stops, okay, and that's exactly what they did right there. See that push down? At this point, remember, it's around 33.40. I switched to 1-minute candles and gave the idea. There it is exactly. That's the exact spot using 1-minute candles. Gave the idea of using ones as a long. Okay, so what does that mean? Stair steps, the first break of a previous one's high, which would be 33.42 right here. Worst case stop below the previous one's low, 33.34. That's 8 cents risk. And look at that. That was the low. I'll switch to fives now. That was the low of the day. So 33.42 entry idea, 8 cents risk. It went to 34.48. I went over $1 on 8 cents risk. And for me, the most important part about this is the looking to go long where the obvious stops are going to be, right? I knew they were going to I don't want to ever use that term. I didn't know. I suspected they might try to run these stops. But at the same time, we didn't catch a falling knife because this could have been the beginning of another leg down, right? So we don't know that. So that's why I switched to ones. And we still were buying it as it was moving in our direction because it was coming up at the time, and there's the obvious stop. So for me, that was the best intraday chart trading lesson from all my calls today. I'm going to rip through the other ones because I want to start my weekend. MWW, speaking of shape, was just getting decimated here. Had support on the daily around 7. See this long base here at 7? It had fallen a long way to get there. Look at that. Anytime you get shape like that, again, at support. In this case, I switched to 2-minute candles. Called it over this green 2-minute candle right here, 703, 684, and that was the low of the day. And ended up going to 755 at one point on less than 20 cents risk. Not too bad. We caught that intraday bottom basically almost within a couple pennies. Well, within about 15 cents, something like that. Pay got killed yesterday. See the gap down, closed near its lows. Did have support at 30, so we had it on watch today. I didn't know if it was going to be a long or short idea, but basically I was thinking bounce. All right, when it looked like this, here's the opening 5-minute candle. I said over the microphone to our chat room members, I said this is not typically the way I play a bounce play, but a break of the 5-minute high on pay with a stop below the 5-minute low might work for a long. Okay, and look what happens. that absolutely triggered. And let me pan out here. Pay was huge. The entry on it, again, a break of the 5-minute high. The idea I gave, and I don't usually trade myself in the first 10, 15 minutes, 20 minutes usually, but we have people that do look for early trades, and so that's why I'm on the mic. If I see something that some of those passionate traders, I'll use the word passionate, aggressive traders might like, I'll still say it out over the mic. And pay worked like a charm. 30.58, stop was about 30 cents below, and from 30.58 went to 32.72, $2.14 on 31 cents risk. Smith & Wesson SWHC. Now this one, obviously looking at a great short at the open. I didn't do that. I was looking for a long. I did call one long right in here, and ended up taking a flat. I think I lost a couple pennies on it, but then when it did this, I put it back on everyone's radar and said, now I really like it as a long. Loosely connect the tops of the candles, and you see the shape change? That's what I always talk about. Increasing volume. This is what an intraday bottom looks like. Doesn't mean it's going to be the bottom, but couple that with the fact that you had a long base here. These are daily candles at 10 bucks. Okay, so the gap up, you know, it should find support that used to be resistance. All right, let's go back to that shape again. And I went ahead and just grabbed it at 10.05, giving it about a dime risk. Okay, took it at 10.05, and that was the intraday low. It ended up selling off near the end of the day, but look at this. At the 10.05 grab, about 10 minutes later, we're in the 1040s, and it went to, I think, 1050 from 10.05. That was super nice also, and I'm going to rip through just a few other ideas I put out. I mean, almost everything I put out today worked, so if it sounds like I'm bragging, I am. It doesn't happen every day. SanDisk was basing like this. I said SanDisk base break might work, and it broke the base and never came back below it. Ended up giving a nice trade. BCS early on, big gap up. Barclays, European Bank, a tight base here. I said if this breaks the high of the day, I said I'm not a fan of trading ADRs, but 13.05, you know, with a stop below this base could work. And it went pretty quickly, and I didn't take this one, to 13.25. See if there was anything else. Pandora, when it looked like this, you see the big gap down. These are 5-minute candles. The letter P is the symbol. 1061 was the early high. I said 1062 high of day break could work, and within 15 minutes it was at 1097. That was an easy trade. I mean, it hit the high of day and just took off. Keep thinking, oh, PPHM. Now, I didn't trade this right after the halt, but when it looked like this, I said this base break could work, and we had some members jump in on this base break, and it got a quick, I don't know, 30, 40 cents, something like that. And I think that might have been it for the day. Looking at my notes, I think that's it. Anyway, have a great weekend. Hopefully some decent chart lessons, intraday trading lessons for you there. That's what we try to use these videos for. Have a great weekend, and we'll see you on Monday.